Have we missed, if you're a U.S. investor, have you missed the opportunity to invest in these foreign exchanges? Do you believe there's more room for them to run?
There are alternatives there. You know, as you mentioned, the DAX or Argentina, but if you look at Japan, that's still coming off the ground there. You know, that has a lot of support at the moment. Think of Korea, like the alternative to the NASDAQ, you know, the KOSDAQ. That's another opportunity, low-valued market. Lastly, Brazil, which is another economy with high interest rates, but inflation is declining. Those are all, I think, cheaply valued foreign markets that are a good alternative to U.S. markets.
So, Patrick, what do you think? I mean, we've seen some big run-ups. We're just citing a 67% run-up. Have investors missed the opportunity, or do you believe there's more room to run?
Well, here in the U.S., I think the market is very top-heavy. I mean, when you think about the top 5 companies in the S&P, that's 23% of the market weight. I mean, companies like Apple, I mean, the market cap of Apple is larger than the entire Russell 2000 small cap index. JP Morgan has a market cap larger than the entire S&P 500 regional bank market cap. So I think the market here is very top heavy. And when you look to other markets around the world, yes, there's opportunity that has to do with the expectations, I think, of the dollar and where we stand on a number of issues around inflation and of course, the looming one, which is the debt ceiling.
Right. The debt ceiling is looming. Another issue that I think a lot of investors are considering, including yourself, is the Fed and whether we've seen a pause or we will see a pause or there might be another hike. So on Friday, Jay Powell just considerably less hawkish. Does that change your thought about U.S. equities?
Look, a little bit. There are always ideas. There are always companies to invest in, I think, in the market. I mean, I think you just have to be very focused on specific things like cash flow and balance sheets and how a company is going to perform in an inflationary environment. But I do think that the fact that the Fed is a little less hawkish. I mean, right now we're pricing in, I think it's a 20% chance of a rate hike in June. But again, we still have inflation around 5%. So I do think that if inflation doesn't come down, the Fed could revert back to, raising interest rates consistently. And so I think that again is what's creating some potential pause in U.S. equity markets, but there are always ideas out there. And again, when we're looking at individual companies,
so Patrick, that's
we
interesting.
can always find good opportunities.
You're really focused on inflation, but it's really important to note, Ben, that Jay Powell, he was focused on the banking crisis and the impact to that. Does the banking crisis or what we might see from that, is that now on par with inflation, or do you still believe inflation is one of the biggest drivers when it comes to what the market thinks about what the Fed might do?
It would be, Frank, because the services inflation in particular shows resilience, as in stickiness, we say, and that's what they're struggling with. Whether it's Powell or Jefferson or Waller or the other Fed speculators have also kind of expressed an impatience with that level of inflation not coming off quick enough, and therefore they have to keep that rate hike alive. And why the June meeting, we think, is a live meeting, not so necessarily a done deal on the pause.
All right. So we know there is an alternative. We have the terror trade, but you're also looking in the U.S. One of the things you're looking at are dividend stocks. You looked at the DVY ETF. It's actually underperforming the S&P, even though everybody's talking about dividends. So very quick, is this the time to get on that dividend trade, whether it's an ETF or dividend-focused stocks?
So from an underperformance perspective, yes. And in addition, if you are worried about that interest will be skipped on Treasury debt because of the debt ceiling, dividends are a really good alternative to that because you will get your dividend paid.
All right, Patrick, over to you. Where are you positioning? Again, there is an alternative. You can look overseas, but if you're really focused here on the U.S., like honestly, most of our audience probably is, where would you put your money?
Yeah, well, I look to who's stands to benefit when you look at onshoring, reshoring, the diversification of supply chain. When I just look at the energy sector, I really like infrastructure. There's some consolidation going on in the sector. There was a deal last week. I like Enterprise Product Partners, premier pipeline company. You look at the export of LNG, over the next decade. I think and again, dividend, they sport a dividend over 7%. So that's the type of company we're looking at today.